We continue our series of Meet the Manager videos today as we're joined by Denis Clough from Morant Wright. Denis, thanks very much for joining us today.
No, not at all.
Morant Wright are a specialist Japanese equity investor. The CF Morant Wright Japan Fund is a fund on our recommended buy list. A very experienced team of 6 investor professionals. Denis, I wondered if, to kick off, you can maybe just run through the investment process that you and the team use and maybe touch on how you differentiate yourself from others in that space.
Yeah, Gordon, thanks for that. Yeah, the investment process is unusual in one way in that we look very much at companies' balance sheets as the most important thing we look at. So we look at them almost in 2 different ways. In one way, we look at the balance sheet because we're trying to buy companies normally below their net asset value. So if the assets are 1,000, we're hoping to buy the price 900 or less, if you like. And we also look at the balance sheet to see how financially strong the company is. So we're looking for companies typically that have almost no debt and frequently a lot of net cash or net investments on their balance sheet. And the reasons for looking at those 2 things, sort of buying things below their asset value, buying companies with strong financial positions, is simply that we're trying to reduce the absolute risk for the portfolio. So we're sort of saying, well, if we buy something that's less than its assets are worth and it's got a good balance sheet, then even if we haven't predicted the earnings very well over the next 2 or 3 years, we don't think we're going to lose much money for clients. So our approach is really about trying to make clients money, but not taking much risk. The 6 of us are all real natural cowards, so it's an investment process we feel pretty comfortable with.
Okay. You join us at a pretty timely point. We've had some pretty extreme moves in global markets as well as in Japan. Maybe just run us through your take on the recent period and has your outlook changed at all?
Yeah. I think really answering the second part first in terms of the outlook, the answer is no. I mean, we're emphasising very much companies that are more exposed to what's going on domestically within Japan. So in a sense, worries about global growth and China and commodity prices don't directly have that much influence on most of the companies we're investing in. But having said that, some of our companies are quite international, and inevitably the international markets have quite an impact in the short term on the Japanese stock market. And I think what we've seen in some ways is, I think, quite a natural phenomenon. When you have a long bull market, and we've had a pretty long bull market in most parts of the world, then investors get more nervous about looking for things that might be going wrong. And I think events in China have given people an excuse, if you like, a reason to sort of worry about risk and to take some profits in quite a number of areas. I think that's how we'd interpret it, rather than feeling that this is necessarily a sort of watershed or huge change in terms of the outlook for the global economies.
Sure. And we had an update meeting prior to this recording earlier, and one sort of key thing that you mentioned was on the trend of better corporate governance in Japan. Yeah. I wonder if you could maybe just touch on that for this and maybe how that sort of translates into your portfolio as well.
Yeah, I think the thing that makes us most optimistic actually about Japan over the next couple of years is not particularly something about the economy directly, but it is more about corporate governance, which is normally a rather dry topic, to put it mildly. But what we're talking about is a lot of our companies in Japan have accumulated a lot of cash. They're financially very strong. And in many cases, rather too much cash, really, to be efficient. And there's now growing pressure on them from the government, both in the form of legislation and in the form of pressure from shareholders, to return more of that cash to shareholders. In other words, to pay more in dividends and also to do more share buybacks. And I think we feel that suits our portfolio pretty well because of our emphasis on companies which do have very strong balance sheets. We're biased towards companies that can afford, if you like, to do more in terms of dividends, do more in terms of share buybacks. And the other thing which we feel quite strongly is those sort of changes are not really reflected in the prices of those individual stocks, that typically companies in Japan will sell on the same kind of PE ratio, almost irrespective of whether they've got a lot of cash on the balance sheet or whether they've got a lot of debt. So that not only should they benefit, we don't feel that's reflected in prices at the moment.
Okay. And maybe if we sort of look a bit closer into the portfolio, is there a particular, maybe a sector or a specific stock that you think is particularly attractive at the moment that you maybe highlight?
Yeah, I mean, it's a very small sector, but we have a number of the broadcasters in Japan. They're sort of the equivalent of ITV in Japan. And broadcasting is a business where, on the whole, it's quite cyclical. It goes up and down with the advertising cycle. And in the long run, it's not a particularly exciting growth business. If anything, TV advertising is suffering a bit in the long term because more advertising is going onto the internet. So for that reason, it's a pretty unpopular sector with most market participants. But what we like about it is that it's a business that doesn't need much capital. Once you've built your studio, you pay your people, your producers and all the rest, but you don't need much by way of capital investment. So your profits are pretty well your cash flow. As a result of that, the companies have built up a lot of cash on their balance sheets. The other thing which they historically have done has been located in very central areas in Tokyo. And one stock that we particularly like at the moment is called Tokyo Broadcasting, which is one of the biggest broadcasters in Japan. And the reason we like it is, or the reasons I should say, are pretty simple. One, I spoke at the beginning about trying to buy things below their net asset value, below book value. And that the company at the moment sells on about 60% of its net asset value. Not only that, when we look at within the net asset value, most of that is cash and other investments. So the current share price is actually a bit less than its net cash and investments. So if you like, if the business was sold today and you were left with the cash, you'd have more than the market cap left in the form of that cash. And on top of that, it also owns a lot of property. Some of it is still used in its broadcasting business, but some is rented out to other people. And when we look at the value of the property that it's renting out to other people, that is worth almost exactly the market cap as well. So if you like, we've got a broadcasting business, we've got a ton of cash, and we've got a ton of property in central Tokyo. The cash and the property are worth roughly twice the current share price, and we've got the business as well. So it may not be the most exciting business, but for us, that's a pretty appealing investment in terms of risk and reward.
Absolutely. Maybe just to finish up, one of the things we look quite closely at in picking funds and analysing funds is the level at which the managers are aligned with other unit holders. Yeah. I wondered if you can maybe touch on how that works at Morant Wright.
Yeah. I think it works with us in two ways, really. The first, and probably the most important, is we're all big unit holders of our funds. So most of my money, personal money, is invested in our funds. We have a simple policy in terms of dealing in Japanese equities that we don't deal at all in Japanese equities. We just buy our own funds, so that's quite straightforward. So, I have the same interest as my clients. I want to see the price, the funds go up. The other way in which we're aligned is that the business is 90% owned by the employees. We're a very small company, there are only 10 of us, and the 10 of us own 90% of the company. So the success of our funds and therefore the profitability of the firm is very directly related to the value of the shares that I own in Morant Wright. So in that sense, we're also very directly aligned with our customers.
Yeah, great. Well, Denis, thanks so much for joining us today. If you'd like any further details on the CF and Morant Wright Japan Fund, then please contact your broker for a copy of our research notes. And thanks very much.